Hello, everybody. This is Boris Schlossberg. Welcome to Trading Battle number 21. Hello, everybody from anywhere in the world. Good morning, good evening, good afternoon to you guys. Very, very excited to have you with us today. We've got a great battle of two Forex titans. We're going to trade with Petar Jaćimović and Dirk Friczewsky, who are both FX specialists. So today is going to be an FX-only battle. Hopefully, you guys will really, really enjoy that. Before anything else, if you're watching me live or if you're watching me on replay, please be sure to subscribe because we do these trading battles every single week and there's tremendous amount of incredibly valuable education and trade signals that you're going to be able to catch up if you subscribe and like the channel. So please go ahead, make sure you get yourself all organized. This way, you're going to be able to participate and look at every trading battle going forward. So without much ado, let's say hi to our participants. Hey, Petar, how are you? Let's talk to him. Good morning, good afternoon to you. Hello. You're coming to us from Serbia. I guess it's the afternoon to you. Nice to see you. Petar Jaćimović has been trading FX for a very, very long time, right? How long have you been trading FX for?
I've been trading for 14 years full time.
Wow. And it's been quite a journey for you, right? You were telling me before that you really sort of didn't come into your own in trading FX until you finally centralized, until you finally found your rhythm and your process. And you believe that process is the single most important thing in trading. Is that correct?
Yeah, exactly. So first 3 to 5 years, I really struggled with my trading. I didn't have a routine. It was more random. Didn't have a working hours. Did jump from one strategy to other strategy every few months.
Right.
So that really didn't bring any consistency on the long run. But once I found my rhythm, my methodology, I like to use, and I did set the working hours and preparation work, the success actually started to show up. And I since then I was keeping that consistency overall year after year.
Super. We're gonna talk a lot more in detail about your process, but first we're gonna say hi to Dirk. Dirk, good morning. How are you? Or good afternoon, rather.
Good morning. Good morning, guys.
Hi, good morning.
Everything
Good morning. Good morning to me. Good afternoon to you. Dirk comes to us from Germany, right now?
Yeah.
Yes. And Dirk trades FX, as well as some other assets as well. And he's been trading. How long have you been trading? For 15 years as well. You've been in the financial industry for quite a long time. And you have you were telling me you have a very interesting sort of a fusion of both technical, fundamental, and sentiment approach to how you trade. I wonder if you could share that with us a little bit.
Yeah, first of all, talking about the sentiment first, let's check out if some people ever heard about that. Have a look at the CFTC data. A couple of informations will be served every week, once a week on Friday, and it's free. And I mean, it's a position of the big boys betting on a couple of assets. And most important, besides FX, you will find a lot of information about commodities, a couple of informations about indices. And if you like bonds as well, you can use it just as an addition to get some information and to use it as a contraindicator. So the more people are going to be bullish somewhere, the more you should be paying attention on, well, maybe I should slightly take the opposite position.
So the CFTC data, let's sort of educate some of our listeners who may not be familiar with. This is data based upon the futures positioning. This is the U.S. Futures Exchange, Chicago Mercantile Exchange puts this together every single week, and it's basically where the speculators are relative to the hedgers. And as everybody knows, the hedgers are always on the opposite side of the market, and they usually tend to be in the long run the smart money because speculators are always too excited, too emotional, too momentum driven, and eventually that emotion and momentum tips it over the edge. So Dirk looks at those. You look at the extremes. Do you look at 52-week highs? Is there any kind of a particular metric you look at to give you an idea? Oh, I think sentiment is really getting skewed. I should be thinking possibly positioning the other way.
Well, first of all, I get a lot of research as well, and sometimes this kind of a research does the job for me, and I don't have to look at myself all the time. So I see a couple of indications and an adoption in combining that one. For example, let's say about with the technical approach, you can have a look at, for example, the relative strength index. If this is kind of totally overboard or totally oversold, and it's a useful combination with that kind of data, well, then it's another sign that you could be having and could step into a new position for you, or building a position, let's say.
Right. Is there anything right now in the latest data that looks particularly interesting to you as far as positioning goes?
Well, the positioning in the Japanese yen is quite interesting, but I think we are right now we are in an absolutely confusing world. We are at a central bank market, 100% central bank market driven, and it's very difficult to see what's going up next. So the only thing I had a look on this morning, right now this kind of a currency pair is running away from my possible trade. It's the loonie, so the US dollar versus the Canadian. The last 2 days, a very interesting move back up with all these CPI data, with the
Crazy,
with the
right?
WTI oil. So that's kind of an interesting positioning right now to have a look on, and possibly have a look at US dollar Canadian short again. So dipping back out of this overbought scenario right now.
Interesting. Yeah. And on the yen side, what you're seeing is that there's a huge amount of speculative sentiment building to sell the yen, right? On the assumption that U.S. rates are going to go up, U.S. yields are going up, and the carry trade comes back in play. Is that correct?
Yeah, but have a look at all these kind of other information sources like the Fed Watch tool, for example. If you have a look on that one, market probabilities, target rates next year, even in June, is nothing like 0.25 to 0.50, nothing more. And even looking into direction December 22, that's nothing like rocket science. I mean, guys, you know it yourself. Look at the market, look at the Fed projections. It's crazy. They are talking about inflation rates about 5 to 6%, and they're doing nothing. They are caught, absolutely caught.
Yes, I understand, and that's kind of what the market is. The market is basically betting that that it's going to force the Fed's hand. It's going to force the Fed to hike more than it wants to, because inflation is going to be in a runaway inflation. So, Petar, let's talk a little bit about your process, and maybe you could share the screen with us and kind of just walk us through your morning routine, because you said routine is very, very important. You really started to become a profitable trader when you went to a routine. So please tell us a little bit about your daily routine. What do you do? How do you set things up? So we could kind of learn from you.
Okay. So I'm starting, my routine will start with the preparation work the night before, right? And I usually will go to the daily chart, watch my major currency pairs. I'm mostly oriented around the major currency pairs: euro dollar, pound dollar, USD yen, USD CAD, eventually Australian US dollar. So I'm sticking with most liquid stuffs, which are most liquid on the futures market, and there is a more interest from the bigger players, let's say, on that way. And
can I just sorry to interrupt you? Do you trade spot or do you trade futures?
I trade both, right? I trade on the futures market and I trade on cash. Yeah, like spot.
Interesting. That's very, very unique. Okay. How do you? It's just sort of a side question. How do you find the difference between the two? Do you find, is there any peculiarities?
Yeah, there's a good and bad stuffs. So futures got a pre-leverage. It's pre-leveraged market. You cannot define leverage by yourself. If I go to spot FX price, I can define leverage. I don't have a need to have leverage like on the futures. There is a pre-leveraged stuff, and that's all for everyone. It's like that. It's just how many contracts you want to buy or sell. But on the spot FX, I can decide whatever. I can increase leverage, decrease leverage. I can be unleveraged. So I have that flexibility on spot FX. That's why I combine.
I see.
If I really,
do you ever trade futures against spot? Like on one side, like you're long Eurodollar spot, short Eurodollar futures, or do you ever do those?
No,
those kind of
no. I just define if there is a something, and I also define. I don't like the fixed risk, so like that I risk always the same on every position. I judge based on my experience.
You don't, or you do have a fixed risk? I didn't quite understand.
No, I don't have. So if I I have a maximum daily risk that I never go.
Okay.
But if I like something more, let's say like, for example, pound dollar more versus USD yen, I will invest more of my daily risk into pound versus USD yen. They both can provide opportunities, but opportunities for me not equal.
Understood. So you have a budget, and then you decide how you're going to spend that risk budget every day.
Exactly.
I see. So, and
the
what
thing
is that
I like
budget
most? Yeah, the thing that I like most, I invest most of my budget there. The thing that I see that there might be some potential, I invest less. If they evolve, they evolve. If not a big deal. I didn't have a big investment there.
So, what is your daily budget? Like, how much do you give yourself?
Usually 1.5% is my daily max risk for all of operations. So no matter if I trade 4 free setups, 1 position, 3 position during the day, I have a limit. If there is a 1.5 drawdown for that day, I'm out for that day. I go take a walk and watch next day, basically.
How many times a month do you have to take a walk?
Not so many, to be honest.
That's good.
There are some weeks are actually very good. Some weeks are fully positive. Some weeks are not that good. But from time to time, I take walks. You know,
I can imagine
like that. I mean, not very frequent. It's good stuff.
Right.
Definitely,
so,
I do.
So you have a budget, and then you were telling me you come in, you look at dailies. Maybe you could just give us a little bit more of the specifics of your routine.
So I look. This is one model. This is also the Linda Rashke explained this. This is a very simple model based on the Taylor rhythm, basically the cycle. It's a cycle where we have, this is a rate of change indicator with period 2. Usually if we have like 2 to 3 down days, you expect third day to flip or 4th day to flip. It's basically, it's based on the pretty logical statistical, approach. If you check the weekly daily candles, it's a very rare you will see that we have a consecutive bull bars or bear bars, like 5 bull bars in a single wick or 5 bear bars.
That's very rare. Right.
So it's basically going with the cycles, and usually the Taylor defined that many years ago. There's a 2 to 3 day cycle. So for example, this is what I like to watch pound. It's a very hot pound is very hot, for example, for me this morning. Because pound got 2 down days. You see the 2 down trend days here?
Yes.
And today is the rate of change flipped to the upside. You see this flip here?
Yes.
To this? And today should be a buy day. And then I go and explore from that model. I go intraday chart and see how the intraday chart is behaving. If it's confirming my model that my larger time frame model, then I have a good opportunity.
Now, on the intraday, is what particular time frame are you on the intraday?
On intraday, I'm watching almost till 5:30, 2 hour. 5 is more for execution, like is exactly pound.
Does that look good to you right now? Actually,
yeah, it is. It was also.
All right, let's buy it. We'll make our first trade of the day. You want to get long?
Let's buy that pound.
Let's buy. Let's get a long pound
with some high risk. Let's put some bigger size here.
Oh,
because this is
I love it.
You're
my kind of guy.
5 lots.
Beautiful. Look at this. Get size. Now looking. So just sort of looking at your
below
process.
For now, put the stop below. Let's say 1.3380. Just, switch this. Okay.
Right.
Put there.
And look to see if New York can extend that move higher.
Yeah.
On the move.
Yeah.
Great.
This was the pullbacks. We're having the higher lows. So I suppose if we take both previous lows on 30-minute, I'm out. If this hold, then I will have a target. We can also set target here. Let's set target. I will go to trading view just to find where is my Where is my target? We can use the 30-minute. We see some single prints. This is a profile I'm using also on the one screen profile.
Correct.
We can use the single prints like a target, for example. It's a bigger target. I'm also watching 1.3415, but definitely 1.3430 and area around 440, 430,
Right.
440. Let's
Now,
place for...
just to let our viewers know, market profile is a tool many professional traders use to show them where there was a lot of transactions at any given price level. And the less transactions there are, the most likely that's going to be the resistance level. Now, is this a market profile on spot, or is this a market profile on futures?
This what I'm watching right now, TradingView, they provide just a volume profile, but it's a very similar. I think 97% is the same. It's the same feeling.
Right.
So yeah, it's providing where we got most of the price action. The
Right.
area we call the ledges, you can call distributions.
Right.
The more we are basically trading around specific level, the bigger this ledge or distribution will be on the profile.
Correct.
And what this is meaning is that price and participants are accepting this like a fair value. They're accepting this price to they want to conduct their businesses, you know. And yeah,
and so that would be your natural target at fair value.
Yeah,
right?
my target is basically, you see this area where we don't have so much of back and forth trading. This pocket area here.
Yes.
This will be my area because price will tend to retest that area because price pound literally just dropped here, didn't trade back and forth so many times here, and it's usually it's a form of the gap in the price action. Usually, price will tend to go in the next days or so to revisit that.
Interesting, super interesting.
So
Thank you,
target.
thank you very much. So, Petar is long pound. I don't want to keep Dirk waiting because obviously he wants to get into the game as well. So, Dirk, hi, how are you? What are you looking at? What looks good to you right now?
I did something like that. It's the typical thing to adopt to a new platform. I just dipping the toe into the water a little bit, and I just opened a poo trade and already closed it, as you can see. Ridiculously $1 rolled into the portfolio.
There you go.
But it's just
a dollar
to adapt to a dollar is a dollar, to adapt to that kind of platform and to see how it's working well for me. And so that's the first step, first of all. And of course, I don't want to give the impression that trading is something like gambling. It's hard work from day to night or from night to day, as you know. And you will probably have some couple of decisions. My decision already taken here, but the example trade was US dollar versus Canadian, because I'm convinced that somehow in the next move into the opening of the US session, that they will be trying to get the WTI crude oil a little bit back up again on the road. And this could lead us to the conclusion that the loonie will take a profit on that one, because it usually follows the price of WTI.
So just sort of set up the background here. Yesterday we had Veterans Day in the U.S., Armistice Day everywhere else in the world. Banks were closed. This is sort of a half holiday, which is very weird because equity markets are open, FX was open, but bonds were closed. And during that time, with very low liquidity time, we had this unnaturally strong rally in dollar CAD, which went all the way up to 126 level. And trading today actually off that level, 25.85 right now. Part of the reason why it got weak also was because oil had come down quite a lot, off from 85 all the way down to 81 over the last couple of days. But you believe now that oil is pretty much at its support. Fundamental data, of course, is still very, very strong for oil. The market is projecting OPEC is projecting 100 million barrels per day demand as everybody comes back from COVID. So it seems to be, and there's just not enough supply. So it seems to be that oil is still a very, very strong bid. If oil starts to pop back up towards that 85 level, that's naturally going to lift the Canadian dollar and take that dollar CAD trade back to the downside. So 126 to you is a sell zone now as a potential trade. And are you in that trade now? Are we short dollar CAD for you as our first opening trade?
like I said, it's a ridiculous amount of volume. It's just it's still a micro. It's not a micro,
so you just
mini
take,
point
right.
0.1. So there's nothing to talk about. But it's just you can. I don't have a look at the accounts of people out there, and I don't feel, and I don't want to feel responsible for them just taking a trade and dipping with me, and later
Well, don't
on
worry, they're
happy
not.
about something.
It's all about. It's just you and Petar. Everybody else who's watching us is going to take responsibility for their own trades, or just simply watch us and learn, which is really what it's all about. Nobody's telling anybody to trade there. So I want you just to focus on your own ideas and do whatever you're comfortable with as far as your risk goes. Now, I talked a little to. Sorry, go ahead.
Seeing that one in addition, because you talked and you explained that kind of stuff I meant about the US dollar versus the Canadian because of oil. It's another thing with Euro NOK as well. Check out the Norwegian krone. The Norwegian krone is absolutely something like the same play. It's an oil play, still a very, very difficult to play, but it's still an oil play. Have a look at the old days in 2020. You see a couple of really bad conditions for the NOK, and it's all bringing your charts on the NOK. Take a WTI or a Brent chart and just put it on that kind of a NOK, and you will see it reacts quite similar.
You've actually read my mind, because we are going to move to our second challenge of the day now, which is to trade the exotics. And since you brought up NOK, it offers you an opportunity to go out there and express your view. You can get long NOK. So to be short Euro NOK, I guess, is what you would want to do, on the idea that if oil pops, the Norwegian krona is going to show some relative strength versus the euro, and that could be a good trade for the day. We're going to do that for you on your second challenge, right?
So it's something on top of that, besides all this kind of let's say oil play. Just to have a look at this kind of central bank, the Norge Bank, and these boys are one of the rare boys out there hiking into the foreseeable future, and they already told about hiking twice into the next 6 months to come, and possibly they even start hiking again in December. So this is the reason the NOK got stronger. And on top of that, maybe not only for intraday traders, maybe it's kind of interesting to have a look at a couple of, let's say, additional strategies when you start shorting Euro NOK, so you're along the NOK. In that case, you are maybe interested to earn the swap overnight all the time, if you keep on holding that. So that's quite kind of interesting, and the more there's this kind of interest scissors, the spread is bigger, and the more you earn the swap, of course.
Sure, absolutely. This sounds like a great idea. Dirk, do you want to put on that trade? Because I want to make sure that you're in the position for the exotics, and then I'm going to go to Petar and ask him what looks good for him on the exotics. So just for everybody who's watching us, what is an exotic currency pair? It's not anything exotic. It's just simply a term we use in the forex market. So we have the major currency pairs, which are just euro, yen, pound, euro, yen, pound, Swiss, Australian dollar, Canadian dollar, and New Zealand dollar. And really, you would say to yourself, well, why are those major currency pairs? It's not that they're major economies. Only Europe and US and Japan are really major economies. China is a big economy. India is a much bigger economy. The UK is a tiny little economy in the relative world. Why is it considered to be a major pair? All of that is because of history. It's just simply historical precedent. Though this was the foundational currencies that everybody traded in the currency market when it first started. So that's why they're called the majors. And as you notice, by the way, 5 of them are basically British colony currencies. New Zealand, there are more people in my zip code than there are in the whole country of New Zealand, yet the currency is very liquid and everybody trades it because of history. So when we talk about exotics, we're really talking about upcoming development countries like Mexico, like South Africa, like even Scandinavias, which are not even developing countries, which are developed countries, but they're just considered to be exotic pairs. And challenge number 2 for our competitors today is to find an exotic currency pair that they like and express a view. So Dirk was telling us about really interesting reasons for why he wants to be long the Norwegian krona, because not only because oil may be bouncing and it's a very, very correlated currency pair to the oil. But because the Norwegian central bank is much more hawkish, certainly much more hawkish than the ECB, which is going to remain stationary for as long as we all probably live. And therefore, if the Norwegian central bank raises rates, usually the key thing you have to understand about Forex is that when rates are raised, it's not one time and done. It's a continuous cycle. So the spread between the euro and the krona is going to expand. It's going to become a very, very lucrative carry trade for anybody long that position. So that's his thesis. It's a really interesting thesis. I like that trade. What about you, Petar? What are you looking at as a trade?
To be honest, I'm not watching exotics, but this is basically just on the price action stuff.
Okay.
I'm short is USD Mexican.
You're going to short dollar mex. Okay.
Yeah, because we got some free bar balance here. I don't know if you see my screen.
So let's just orient everybody. This is what chart? Is it a 4-hour chart? It's a little bit hard for me to see on the screen.
This is hourly.
This is 1 hour chart.
Hourly
okay.
chart. Yeah.
Very good. And what happens?
And we got this. Yeah, we got this trend line. We poked the ball. We lost momentum there. We turned back. Got like a free bar balance and breakdown. So price action stuff.
Could I slow you down so that for those everybody who's watching, what is a 3-bar balance? What is that? What does that typical setup suggest or signify?
3-bar balance. This is a pretty standard stuff. I mean, it's basically you have either it's an upside or downside. You can be this. I will just mark you some examples. Just find a rectangle here. Object scripts. Where you insert just to find rectangle. Okay. You see the rectangles like this is a 3-bar.
Yeah.
It's basically it's a form of the balance. It's a very standard form of the balance.
Okay.
Because market, you need to have usually market if it's a 2-bar, either is the inside bar. So you have like an inside bar formation, which is also a form of the balance, but it's a 2-bar pattern. 3-bar is just you have that 3rd bar still within that initial bar range, like this one. Like, I can just copy paste this to.
No, we see it. Here. It's okay. We see it. Go ahead. Yeah.
This is also a form of the 3-bar balance. Market.
That's what it was. I see. And so that sort of breaks down.
This is a form of 3-bar balance as well on the bottom.
I see. And once the high or the low of the 3-bar balance gets broken, that's a pretty good signal that there's continuity in that direction.
Yeah. But of course, you must watch that within the context always. Like
sure.
If it's in the important pivot level and you see the 3-bar balance, that's much stronger than just it's a 3-bar balance. Just without the context. So context is very important.
So in this case, the context is that we have sort of a triple top there, and
we have like a triple top, like a trend line. Market basically failed to sustain above the previous pivot highs and got a 3-bar balance and the breakdown. Yeah, it's pretty
interesting. And Mexico is also not so much anymore, but still trades pretty much like a petro currency, meaning that Mexico is obviously an oil exporter. So any rise in the price of oil, which today is down back to 80.32. So you guys are all buying a dips here, looking for the move. It's going to work. But for right now, Petar's trade is working on the price level. The pound is slipping, but he's got 80 stop on that. So it's just the pound naturally moves back and forth, obviously. And then Dirk, what's this with euro pound? What is this trade? Tell us a little bit about that. What happened to that trade there?
Well, this is just a so-called information that I got in the last 2 days. It's kind of interesting that sometimes I know it might sound a little bit ridiculous to use orders in currency trading, but sometimes the euro pound is not that big a pair like the majors. It's a euro cross, so sometimes these kind of orders out there are working. So there are a couple of big positions. We are talking about a triple-digit million number and close to a $500 million number in options expiring this Friday. So this is.
And what's the? Do you know the level of expiry? What the
Watch this here at my second screen. Let's just have a look at this one. Hopefully you see you see the platform, right? So
unfortunately, we just see you. We're just seeing you right now.
Oh, that's okay.
So if you want to share, if you want to share the platform,
right
we'd like to see your platform.
Okay, so regarding first of all, regarding the option expiries, we are talking about 084, 08520s, and 8625, and we are talking about 1.2 billion dollars in the whole in euros in the whole expiry, and so let's see where I'm sharing. I thought I'm sharing. I'm stop sharing right now, so I'm resharing now the screen. You should be seeing the platform.
We're not. But just to sort of reprise this, you are short euro pound, right? Is that correct?
That's right.
Looking because this is an interesting trade that he's trying to do. There is a option expiry essentially at 85.20, and that seems like a magnetic number. In other words, when there's a lot of options around that number, the market likes to move spot towards that number to try to expunge the value of the option. Or on the other hand, somebody's going to try to defend, to try to make sure their option position stays in the money. And that allows you the opportunity to basically trade directionally on, especially on something like a cross like euro pound, which doesn't have any news flow today, and therefore could be moved around, one way or the other, in an interesting way. It's actually interesting if the euro pound trade works your way, it actually helps Petar, because that means they're going to be selling euros, buying pounds, and maybe they're going to ramp the pound. And help this trade. So you have an unusual help here to Petar. Now, Dirk, I wanted to ask you something interesting. You're obviously more of a longer term trader. There we go. I think we see your trade. Is this? Yeah, there's your screen. Very nice. You're a longer term trader, and one of the things you were telling me about is that you've been very, very bullish gold on your Twitter handle, which is FX Dirk, by the way. And Petar's is Dr. Petar _ Serbia. If you want to follow both of these gentlemen, they provide market sentiment ideas, market analysis, trade ideas. Really, really great resource. I recommend you guys follow them as well. And my question to you was, if you could maybe run us a little bit through your gold trade. Tell us a little bit why you were bullish gold in front of the CPI number, and how that whole trade was managed and what you did. If you could just give us a little deconstruct.
Okay, so I'm not familiar with the complete exact numbers right now, but you can have a look at my Twitter feed. You can see the entry, you can see a possible addition for the trade, and you can see the first exit, and as well you can see the second exit. So I managed to do that half off and move the stop loss scenario into the entry, and a so-called free trade scenario for the rest of the trade. So I had something like the typical separate trade. First, just off the table, taking the chips off the table. Second half, let it run. So now, this is something when you
established that trade, what was the risk parameters of that trade? Sorry, I was just trying to understand.
Okay. So when you just have a look, we could do this here with gold as well, and just for a second, having a look at that gold, and you see that one before. Why is it not working? Chat window. There we go. Some loading happens, and usually you should pick the daily chart. No clue why it's not loading.
Yeah.
Okay, there we go. There we go. Okay. It's a long line. It's a long line for Australia. So anyway, you see there were a couple of dips the last weeks, and I'm sure the gold bulls already were ready to jump out of the window, because they really suffered all the time, and they're really scratching the head, having a hard time. Why the heck is gold not really rocking up? Why is gold still in negative territory regarding the whole year? and it's
Right.
nothing like an inflation protection. So gold bulls had a really hard time, and just not very far away before the CPI data, I simply had a look on gold, and it was way in direction to oversold in kind of 4-hour channel charts and stuff like that. And on top of that, it's getting crazy. You see all this kind of Bitcoin guys jumping on board and pumping up the whole jam up the road, and gold has really not started yet. So then thinking about an additional information about the CPI projection, they gave us a couple of projections out there, a couple of research boys, and they told us about something like 5.4 in direction 6%, and everything above 6% is a Rocky Horror Picture Show for gold, and it should be pumping up. But you should be aware of that, taking the chips off the table, because they don't want gold going back up in direction 2K and over that, because that scares the shit out of a couple of big boys at the Fed, I guess.
Okay.
Because the dollar is the currency. The dollar is the currency. Gold is not the currency. The dollar is the currency. And I'm sure somehow they try to manage that stuff again. They once did that in 2011 and a couple of years like that, with hiring the margin requirements for longs and all that stuff. The gambling. And I mean, right now it looked like gold could have a short lift-off, and that was the trade. That was simply the trade, and the management of the trade is very important as well. Just if it's possible, take the chips off the table, and if you don't want to take the whole position, take the half off the table. Be happy about that, even if it's beer money or it's a little bit more. Take it off the table and let the rest of it simply run, and just take the stop loss directly. BE, behind entry, behind costs. So that's what you should do as a trader.
So your original risk, was it like a 1% risk? What was your risk reward in that?
0.5.
It's a 1.5% risk. And then your first exit was
0.5.
0.5. 0.5. So half a percent risk. And your first level of exit, was that at 1-to-1 risk, 1-to-2 risk? What was that? What was your first exit?
The first exit, none of these rules, just taking it off. Just taking it off. Nothing.
Okay, but like,
rules like that.
At what level do you want to take how far, like how much money do you need to have in profit in order for you to feel comfortable, take first exit, go to break even?
The starts with 10 to 50 to $100. This is very, very difficult to name that and to absolutely to.
Okay.
Let's check out. Let's check out where I placed that one. I just checked out my Twitter right now. Besides, it's more comfy for me to have a look on that one.
Sure. Take it down. Take a look at it because I'm curious how, because you managed this really in real time. You went on Twitter. You said, look, we're going to have hot CPI. Gold is going to be a trade. I'm going to get long gold. Hot CPI confirmed. Gold broke out really, really strongly. I remember that day because I was short gold that whole day. That was really a lot of fun. We actually managed to get out of the position making money, but that was, I was on the opposite side of that trade, having sweating bullets. But you were absolutely right that, that the gold ran up. But I'm just curious, like how you managed. And then you went to break even. That's very, very important to you. You like free money because then you obviously have the patience to hold it for multi-day.
It's a little bit like a relief. It's a relief for you all the time when you have something like a setup like this. Just let it run, but you're protected. So nothing could go 100% wrong. So it's something like a very comfy situation. I simply managed to, I stepped in at 1817.1, so 1,817 and 10 cents. I went long. So, and just in case, I posted that one as well, just in case I wanted to add another shot at 1,785. So you see that's a total different setup. It's a longer term setup for a swing.
Right.
And even if it's possible, even if it's not working in the first one day in favor of you, you can simply add one. So this one was the first one. I took this one out at 1,832.18. Okay. And then I moved the stop loss into the entry zone. And we are talking about a couple of days. This trade was done in 3 days. Okay.
Right. It's trading today at 1853. It's trading 1853, so it's like
Pardon?
40 points off the thing. And
Right.
this
The
gave you the
second- the
patience
second-
and the strength to stay in that trade.
Yeah, this is just something like the setup when you are already secured the half of the size and you secured the chips off the table, and then you just leave the second size out there. The stop loss is at break even. Nothing is going to happen, and around that CPI data, the gold price moved up in direction 1,868, I guess.
Yeah.
And
Great
I
run.
stepped out at 1,861. So that's enough. That's simply enough.
Nice.
Have a couple of trades like this. That's the job you should do. Not too much greed. The more greedy you get, the more you crash it somewhere. And I mean, that's the kind of let's say experience I had the last years. Going to be very greedy, and you simply overdo all the time. Then you really, you're falling apart. Your account is going to be crashing.
Yes.
You will be experiencing a huge drawdown, and you don't want that.
Right. So you constantly fight the urge for greed, which is the biggest weakness to many traders. I agree. Very interesting. So, interestingly enough, as we sum up here after two challenges, Dirk's position. Both the traders are a little bit in the red today. It's a slow market, obviously, also. But Dirk, because he's not as aggressive today, is actually winning by losing less. That's always fun because he really hasn't.
Oh my God!
He hasn't put on size. Obviously, Petar has put on serious size here, and the thing you need to understand is if he can survive, if he survives the stop and pound does turn around at the end, by the end of the session, or maybe by the time the end of the week, things could really turn around. We've had many situations where one trader was behind during live session and then came back to win big next time. So this is the beauty of the markets, is you never know what's going to happen in the next second.
Yeah, can I say just a one note? Yeah, this sizing, don't try at home. I mean, I tried this size because of charity, I want to make more for charity. So just for people to...
Yes, Petar is trading for charity, so he's trading for size because he wants to win. And don't despair. Things can turn around. But now comes our time where we're sort of running out of time, and I want to get us to the third challenge of the day today, which is to ask the traders longer term position through the weekend into next week. What do you think? What is your market view, both from a price structure, maybe fundamental structure, and where do you see the most interesting trades going? So, Petar, we'll start with you. I'd love to know your opinion about the market and what you think would be an interesting trade into the weekend.
So for next week, right? Like a short term,
yes.
Right?
Correct. Into the next week.
Yeah, I mean, we can look together. So let's start with, for example, with the gold. I think this is interesting for everyone.
Gold. Okay.
Yeah. There is a few stuffs which got my attention here. First, if you see here, let me go to the futures market because it's a centralized volume, right?
Okay.
You see volume spike here after the news.
Yes, this is the CPI news, massive spike volume, right?
Exactly. This is the biggest volume spike, I think, if I checked, relative to last couple of months, to be honest.
Okay, interesting.
If you see nothing on the left above that climax. This is technically a climax. So climax for me is everything. It's a buying climax. Climax is everything which is going way too fast, way too far, and ultra high volume. So some vertical moves, like usually after the news, we see climaxes. Either it's a selling climax or a buying climax. Now, the key point here to watch is what will happen after the days after the climax. Okay. During that day of the climax, market is very hot. Buyers trying to buy pullbacks and stuff like that. That's all fine. But for me, it's interesting for the short-term perspective to watch the days after, day after, a few days after, to get some more pieces of the puzzle, to get better sense of what market is trying to do. So the very next day, which was yesterday after this climax, market did the pullback and did rally here, and made a big. You see the triangle. You're probably all familiar with symmetrical triangle.
Sure.
Right. It started to contract very, very hard, and around this pin bar or tail, call that how you want. This is where the sellers initially came.
Yes.
During that climax day. Okay, so market didn't have a power initially to take that. Today, which is the second day of the climax, we got some imbalance. You see the profile is not oriented around the middle. It's more like few distributions through the day.
Yes.
And it's going to the downside relative to the previous day, right? We have some lower highs based on the Tokyo session.
Right.
See? So for me, the situation is like this. If the single prints can hold, single prints, I treat single prints like area where we didn't have so much back and forth. You remember the gap I spoke about?
Yes. So this is that same gap. Yeah, same concept.
Yeah, same concept. So the price usually will try to search to revisit that, to retest. Just think about the testing process is one of the most important processes for the buyers to go in with the bigger money, right? Because just think about it. If you want to buy a car, do you want to test that car first? I mean, majority will want to test car first before they buy, right?
Right.
The same thing, the buyers will need to make sure that supply actually disappear, or actually that the supply was compressed, that they can buy more. So what they do is they mark the price up, okay, and then you watch the pullbacks, and if the pullbacks will provide on the lighter volume, and if you see supply is not that strong, then the market can be ready for the next rally, right? So they need to. This is called, it's a classical principle. It's called test of supply. And that's something that also Richard Wyckoff spoke about. He was phenomenal in the volume analysis. I mean, his uptrust, testing of supply, and all of the stuff with relative to supply and demand. So for me, for example, as long the single prints can hold, more upside is there. If we can see that we take the single prints, we eventually go hard against this. This can open the door for a short-term change in behavior. So we can have
reversal.
a downside.
Correct.
For now, it's holding, but I think we might see that to be on the retest, previous lows.
So you're really surprising me now. So is your view that you want to get short gold into this retest? Is that going to be your
now? For now, I will tell you honestly. For now, my view is I'm neutral stance because we didn't test single prints.
Okay.
It is bullish because
I can't trade a neutral trade. I need you to give me a trade. So what would you give, gun to your head?
Yeah.
This trade, you're going to be sure. Is gold going to be lower Monday or higher end of day Monday?
Okay. I don't know that, but I can just say it like this. You can. The idea behind this is to be the bullish on the gold and eventually put a stop. I mean, this is how I'll think, below the single prints level. This is a short-term swing play.
So this would be your short-term swing play. That's the smart play. So you get long now with a stop right underneath that trend line, because if that stop is broken, then your thesis is wrong.
Yep.
Okay. All right. So we're going to get long for you on gold.
Yeah.
Okay. And we'll see how that plays out. I think you're right. I like the price action. I mean, I'm looking at the short-term price action. That V-shaped bounce is very, very bullish in my opinion. It suggests that there's very little supply at those levels. There's a lot of demand still, and the fundamentals just continue. I mean, everywhere my ears are ringing from the word inflation every time I'm turning on Bloomberg and everywhere else. I think it's getting to a almost a frenetic mode, and that's actually very positive because we're nowhere near exhaustion mode. We're just in this momentum sentiment mode. So I think exactly. I agree with you. I think it's an interesting trade. How about you, Dirk? What's looking good to you? And by the way, you guys are you can take the same trade if you like, and you just do bigger size. Just beat them on the bigger size if you like. But what do you think is attractive to you into the weekend Monday close? Because we're looking now to establish a trade that will give you more of a swing-like structure.
Well, maybe you can see that right now.
We're seeing you. Let's see if you can share your screen. And if not, maybe you could just know that we see your screen. Yes, beautiful. We see your screen. And what are we looking at now here? This is Eurodollar.
This is Eurodollar, and this is Eurodollar on the daily. And I just took that shot this morning, and just to show you the daily chart and a couple of Fibonacci retracements where we're going through the last weeks and probably the next days to come. And right now, of course, on a daily basis, it doesn't look that way. It will be something like we start to the upside or a relief rally, but it's always possible in that kind of mode right here regarding early Monday going into the European session that we will see something like a 20 to 30 pips of a relief move to the upside. So we are talking about the 114.30s up to 114.70s possibly. That's it for now.
Maybe even the 115. Maybe even the one, because the 115 is a very big level.
Yeah, that's right. The 115, we could see. Maybe you can see that when I'm just marking that. We could see a retest of that level again. Mm-hmm. So that could be possible.
So interesting.
That the euro dollar is moving back up just to test that back and to get back down again. We saw this with a level here right now, testing this area right here. Right.
Got it. Okay.
So this is something we got here, and regarding the next weeks to come, it doesn't look very shiny for the eurozone and for the euro. And I want to talk about all these kind of COVID stuff, but on top of that, talking about the future expectations. Look at the eurozone. I mean, we are totally nuts going into 2022 without any kind of gloomy talk about interest rates moves and nothing like that. The funny thing about it is mostly we are talking about possibly ending up with that kind of asset purchase, but even that is not 100%. So it doesn't look very good for the euros. So that's the case I wanted to express with that.
Yeah, no, I understand, but you're trading right now short-term oversold conditions, a very natural retrace to the 115, which is a very highly magnetic number for short covering, because obviously the conventional wisdom is going to go shorter, and the market makers want to catch the speculators on the wrong foot, and you're trading really for that short-term bounce. So that's what we're going to do with the Eurodollar. Now we're coming up to the end of the show.
You can see the entry. You can see the entry at my Twitter right now. I did post that. I called out that one, and you see that I might be closing that even tonight. I'm not sure about it. Maybe I'm not really taking it over the weekend.
Okay. We'll watch that very carefully. We'll see how that plays out. We're coming to the end of the show, and I want to give everybody, both of our participants, a little bit of chance to talk a little bit about themselves, their business, and also the charity that they're playing for. So, Dirk, can you tell us a little bit about what you do, and then what charity you're playing for, and just and let everybody know.
So, first of all, besides the whole trading business, I have a company. I run my own business here. My clients are not private traders and not private boys, institutions. I have institutional clients in the financial world, in the broker industry, and everything you need to know, you will find it on www.germantrading.de. So that's the website. On top of that, you will find a lot of information about me and my trades and some kind of views, even from traveling, all that kind of stuff at FXDirk, FXDIRK on Twitter. So that's my shortening there. And if you're interested to see that stuff, you're very welcome to just be part of that Twitter community there. Besides that, charity stuff today would be happy, of course, in case of good trades and more. But the market is very snoozy. That's the Stiftung Bärenherz, which is a child hospice here in Germany, here in my hometown. And they are doing a really good job. And of course, it is a sad story what could happen to really little boys and girls with cancer and all that kind of crap. And they're doing a great job here.
Wonderful. What is the hometown? What is the hometown in Germany for you? What?
Wiesbaden, that's quite close to Frankfurt.
Wiesbaden. Yes. Okay, I've heard of it.
So
Yes,
that's
absolutely. What's
approximately something like 45 kilometers, 40 kilometers. If you just have a look at the map, 40
Right.
kilometers west from Frankfurt.
Right. And Frankfurt, of course, is the financial capital of Germany and
The heart of the
continent.
euro, yes.
Yes, for the year. Exactly. Yeah. And Petar, what about you? Tell us a little bit about your work in FX. What do you do? And also tell us a little bit about the charity. I know you're very, very motivated. That's why you took big positions. So tell us a little bit about
Yeah, I really wanted. Yeah, but my market is just quiet.
I know it's Friday.
So-
It's quiet, but remember, it's not over until it's over. As we say in America, it's not over till the fat lady sings. Go ahead.
Yeah. So yeah, basically, I trade my own account. I have also with my friends, colleagues, we are having our project. Trading also the stock.
Mhm.
So I'm mostly in trading and educational. So I'm doing for company the educational part.
Is that
Go live.
the Prosperium FX? Is that the company that you have?
No, Prosperium FX is just for people who really wants to master market profile, let's say.
Which is really interesting, and I want everybody who's listening. This is interesting, and because Petar has this was a fascinating part about the show, this whole market profile thing, which we don't really see that much on the show. So if you are interested in more information about that, absolutely, I guess they should go to Prosperium FX to learn a little bit more about market profile.
And I'm basically working for educational company called Go Live. So they're based in the US. So they're very, very large. So people who wants also more education, they can also join there as well.
Okay.
And yeah, for the charity, there was a little sad story. I mean, but I'll tell you just very fast. When I was 2 years old, I did have operation. Literally, it was very, very important. If I was late for 1 day and they didn't operate me, 1 day I was late, I will not be
Wow.
I don't think so I will be with you right now. So that clinic, that hospital, it's called Tiršova in Belgrade, and they're a clinic for the kids. And so I really wanted to make something for them, so also to give them like a gift,
Of course.
what they're doing.
That sounds great. I'll add my 2 cents to that. That's a great story. I mean, I think I'll add to both. I think today charities are really both worthy charities. I'm happy. I'll donate myself a little bit to both of them because they're great supporting stuff, and I hope everybody enjoys it. Now, I want to thank both of our traders, Petar and Dirk. It's been a wonderful, wonderful show. Let's just take a look at the final. Can we look at the dashboard one last time just to see where things stand? Obviously, I think Petar is still behind because of size, but I'm just curious on the positioning size if we can do that. And of course, everybody who's listening to us, absolutely subscribe to the show. As you see, there are jewels. They're just unbelievable gems of information at every single trading battle that we do, because traders come from all over the world with an enormous amount of knowledge, and we get to share that with you. So do not forget to subscribe to the Trading Battle channel, to like the channel, and to come join us every single week as we do these trading battles. And of course, watch them. If you're watching on replay, do the same thing. So I want to thank everybody for the participation. We're going to email you, let you know what the final numbers are. Maybe the pound comes back, and if it comes back with a vengeance, then I think Petar might win. But in the meantime, both competitors have done a great job today in a relatively slow market, and both of them are trading for just great charities. So I want to thank you very, very much. Thank you, Dirk. Thank you, Petar. And I will see everybody in the markets. As always, everybody have a great weekend, great time. Boris Schlossberg for Trading Battle, over and out. Thanks again, guys. Bye-bye.
Thanks for having me on.
Bye.
Bye-bye.